Every few decades, a nation rises out of nowhere. And just as predictably, another one collapses, despite hardworking people, natural resources, and advanced technology. So what decides the difference? It's not elections, it's not productivity, and it's definitely not what you're taught in economics textbooks. Behind every boom and every collapse is an invisible ledger, a balance sheet most citizens never see, never vote on, and never control. And once a country slips to the wrong side of that ledger, history shows it rarely recovers the same way again. Setting the stage, what this ledger really is. When we think of national success, we're told to look at GDP, growth rates, or stock markets. But nations don't fail because they run out of money. They fail because they lose credit power. The invisible ledger isn't cash, it's debt relationships. Who owes whom, in what currency, under what conditions, and with what enforcement. This ledger determines which countries can print freely, and which must beg Dan. And it has existed in some form for thousands of years. Origins: debt as control, not finance. In ancient civilizations, debt was understood as dangerous. That's why Mesopotamian kings periodically erased debts. They knew that if obligations stacked too high, farmers became slaves, armies weakened, and revolts followed. Debt wasn't just economic, it was political. But over time, debt evolved from a temporary tool into a permanent structure. The turning point came when empires discovered they could fund expansion not through taxation but bartering. Once lending became institutionalized, the ledger became a weapon. Those who controlled credit could decide who grew and who stagnated. The rise, how the ledger became global. By the 19th century, global finance was centralized around a few powerful banking hubs. Britain didn't rule the world, just with ships. It ruled with settlements, loans, and interest. Countries that borrowed in foreign currencies surrendered sovereignty long before armies arrived. Then came the 20th century. After 2 world wars, a new ledger was formalized. International institutions emerged. Currencies were ranked, and global rules were written quietly favoring those who issued reserve money. This is when the invisible ledger became nearly impossible to escape. Some nations could run deficits forever. Others faced collapse after one bad year. Same world, different rules. The breaking point, when the ledger turns against you. History shows a clear pattern. First, capital flows in. Loans expand. Growth accelerates. Then comes the pivot. Interest rates rise. Currencies weaken. Debt becomes unpayable. This is the moment nations realize the ledger was never neutral. Latin America in the 1980s. Asia in the late 1990s. Southern Europe after 2008. Entire populations paid the price not because they failed, but because their position on the ledger shifted. Once confidence breaks, the system doesn't forgive. Fallout: who pays the real cost when nations fall on the wrong side of the ledger? The consequences are brutal. Austerity replaces growth. Public assets are sold. Labor becomes cheap. We're told these are necessary adjustments, but notice what never gets adjusted: the debts themselves, the infrastructures, the power hierarchy. The ledger stays intact. Only the people absorb the shock. Failed fixes: why escape is so rare. Every collapsing nation is offered the same remedies: structural reforms, fiscal discipline, market confidence. But these fixes treat symptoms, not the ledger position. You cannot outgrow a system designed to extract more than it gives. Once trapped, countries are forced to prioritize debt service over development, stability over sovereignty, compliance over growth. The ledger doesn't ask if policies work. It asks if payments continue. Modern parallels the pattern today. Look at the world now. Record global debt, rising interest rates, currency stress across developing nations. Meanwhile, reserve currency issuers expand deficits without consequence. This isn't hypocrisy. It's architecture. The invisible ledger still decides who gets flexibility and who gets punished. Different century, same hierarchy. 3 takeaways. What this reveals: first, national success is less about productivity and more about credit position. Second, debt is not just money, it's leverage over the future. Third, the global system rewards those who write the ledger, not those trapped inside it. Warning, an open-ended thought, a world governed by invisible ledgers, doesn't collapse suddenly. It fractures quietly. The danger isn't one nation falling it, as many realizing too late that the rules were never equal. The question isn't whether the ledger exists. It's how long it can remain invisible. Call to action if you want to understand how power really moves through money and why history keeps repeating. Subscribe for more deep dives like this. Because nations don't rise or fall by chance.